All right. So I hope that everyone had an opportunity to visit with our sponsors, without whom none of this would have been possible over the last 24 hours, 48 hours to be more precise, in addition to our opening event. So sustainable financing, is it something that's on your mind? And if not, really it should be. I think we've heard a common thread of conversation from most of our leaders throughout the last couple of days. And so at the CAB, we believe in leading by example. And I am truly proud and honored to announce that the CAB has signed to become a UNEP supporting institution. And I hope that after this panel discussion, we will see many more institutions joining and doing the same. The Caribbean is one of the world's most vulnerable regions to the adverse effects of climate change, and the need for a multi-industry approach to building a climate resilient or smart environment is paramount. I am sure that we have all experienced firsthand the effects of the increased number of extreme weather events that have occurred within the region. Joining me today to discuss the role of the financial services industry in this regard is none other than Ms. Maria Eugenia Sosa Taborda, the Latin America and Caribbean Network Coordinator for the United Nations Environment Programme's Finance Initiative, UNEP-FI. Maria has more than 15 years experience with the dissemination and consolidation of corporate social responsibility strategy in large companies, sustainable finance, and developing innovative projects with positive impacts. Joining her on the panel this afternoon is Mr. Ray Klien, Group Head of Investment Banking for Republic Bank, the leading capital markets advisory in the Caribbean. In his role, Ray is responsible for mergers, acquisitions, and debt capital markets and structured finance. Welcome, Ray and Maria. Please join me on stage.
Hi,
Thank you so much for being here. Hello again. Hello again.
Hello. Thank you so much.
It is our pleasure to host you this afternoon. And so, Maria, in quick order, I will hand over to you. I know that you have some talking points prepared for us, and then Ray, we will speak a little bit to you about your experience and the catalyst for you coming into this agreement. All right, over to you, Maria. Thank you.
Thank you so much, Wendy. Thanks a lot for the invitation. And I want to congratulate you for becoming a supporting institution for UNEP-FI. I think we are very proud to have you on board, and I'm sure that we can do a lot of things in the region, and having you as supporting institution would be become our role even more important. So I will share some slides with you. Just give me one moment. So Today, I will talk about the principles for responsible banking. But before I would like to introduce who is UNEP. So we are part of United Nations Environmental Program, and we work with banks, insurance, and investors to integrate social environmental issues in their strategy. So it's really a strong partnership since 1992, and we see that we have this possibility to develop guiding norms to mainstream sustainable finance and co-create practical research and help financial institutions to integrate sustainability in their own journey. So I'm very happy to be here with you. You can see that we have more than 500 members. And then here you can see that most of our members are banks. And on the right hand, you can see the numbers that we have for banks in the region. So Europe is the first one, then Asia, and afterwards Latin America and Caribbean. As Wendy mentioned, we're going to have in this panel Republic Bank. Very happy to share in this panel with him, with Ray, because Republic Bank is our member, is the only member in the region. And we really would like to have more and more financial institutions on board. As I mentioned before, one of our jobs and my role is to promote the principles for responsible investments, the principles for sustainable insurance, and the principles for responsible banking, that are frameworks that helps financial institutions to integrate into their strategy. So when we look at the timeline, I would like to say that, as I mentioned, 1992, UNEP was established, but 2008, with the financial crisis, I think was a turning point for everyone. And in that moment, it was a concern how social environmental issues impact not only the society, but also the business, the financial system business. So since then, we have seen many other initiatives as the principles of sustainable insurance and recently the principles of responsible banking. But I would say that another turning point is the COP21, climate change, the Paris Agreement, and the SDGs, the Sustainable Development Goals. And these two items are being very, very important for our world agenda, our society agenda, but also for the financial sector. As you know, on Sunday, the COP26 starts, and we are seeing a lot of movement from our countries, from our regions, and of course, also from financial institutions committing to include climate risk and climate opportunities into their strategy. So you also can see in this timeline this kind of new initiative. So it's being crowded, I should say, a lot of initiatives, and it's good to see how many financial institutions are getting involved and how they see the importance of the topic for their own agenda. So some highlights about the importance of and how we can accelerate sustainable economy. So the World Economic Forum, inside four topics are nature related. So when we look since 2017, we had a lot of, when we talk about risk, we had a lot of about social and economic issues as one of the global business risks. When we look this rather in 2021, we see a lot of risks involved by environmental issues. What we see that 50% of global GDP relies on natural capital. So this is also from World Economic Forum, and especially in the region, in the Caribbean, we know how the importance of nature, the importance of tourism, and the impact of natural disasters that has in the region. On the other hand, we see that we have $1 trillion issues on sustainable debt since 2007. So we see more investors looking for this kind of green bonds or sustainable bonds, sustainable linked bonds. And you in the region, you have this opportunity, again, for all your natural resources and all the blue economy that you have on the ground, to also issue this kind of bond related for good for the business and good for the society. We see around the globe a huge increase of asset under management of ESG listed funds since 2010, and we see investors included more and more in their best practices ESG analysis. And 44% of shareholders supporting ESG proxy voting. And in this year, we had huge advance, especially BlackRock and other investors making votes in favor to climate change. So we are facing, I would say, a huge transition. And the question that I have for you, so what's the role of financial institutions in the Caribbean to face these challenges, but at the same time to take advantage of this opportunity? And we see that it's not only the role of financial institutions, of a bank or an insurance or an investor, but of course is working with different stakeholders and shareholders and clients and governments, regulators, to really have this agenda. And we can not only good for the country, but good for the business. And I will say this many times, this is good business. And how ESG risk for financial institutions, how they can appear? They can appear in different ways. So first of all, when we talk about environmental social risk, we are talking about financial and credit risks. We are saying that, yes, this kind of thing can make losses of the collateral, of the asset, of the value, liquidity, access to capital. We see more and more multilaterals providing funding, but with ESG requirements. We are talking about markets. So if we don't adapt, if we don't make this transition, we can have some obsolescence. We can miss market share. There are some operational risks, higher cost, inefficiency, and I think when we talk about natural disasters, this is very clear for most of you. Reputation. So I think that more and more society wants to know where their money is going on, what their money is financed, and what is the license to operate. And the last one, we are talking about compliance, we're talking about legal, and we see in Europe and United States and even in Latin America, the regulation bar increasing a lot. And I know that in the region, many financial regulations and government are waking up for this and trying to include more and more in their best practices and their regulations. So in the end, we are saying that ESG can impact your economic and financial bottom line, but also it can represent, from one side, a reputational damage, on the other side, a reputational opportunity for all of you. And how financial institutions can address these social environmental issues. So I think there are two approaches. One, the risk approach, and the other one, the new business opportunities. So when we look in the region, I would say that many financial institutions already have in place the environmental social risk management system. So this is something that we have to raise the awareness in the region and see more financial institutions working on that, because in the end, it represents risk mitigation. On the other hand, we have new opportunities and new products, new loans, green bonds, to help your clients to make this transition. And in the end, working with the risk side or even the opportunity, you can increase your portfolio resilience and you can increase the income of your bank. So that's the win-win I would like to highlight when we talk about ESG. And there are many opportunities, and we are not saying that we're going to create new financial mechanisms. We are saying that you can use the same financial mechanisms that you have, but including the social environmental lens. So how your loans could have this green social responsibility to help your clients to make a transition for energy efficiency or forest opportunities, how you can advise your clients, how you look consumer banks and also help them to include this kind of thing. And not only environmental issues, also we're talking about financial inclusion, financial health, gender equality. So it's a broad agenda, and of course it will also always depend of the context of the country needs, but on the other hand, what's your business? But again, I think this is an opportunity for all financial institutions to start working this as a strategy, not in the only the product level, but also as a strategy. So I would like, we are pre-COP, so I mentioned that on Sunday we have the conference of climate change around the globe, and I would like to in this speech to highlight why should we look climate change. So we already know that we have this challenge of not exceed the level of the temperature of our world. There are many evidence of increasing extreme heat or heavy rainfalls or droughts, and I think that in Caribbean you are also facing this problem. But I think what is important to mention that the climate change presents a financial risk to the global economy, and that's something that financial institutions are looking more and more in their risk process, in their risk models. And why they are different? First, because they are long-term, not linear and irreversible. They are predictable but uncertain. We really don't know when and how it will happen. And what is more critical is because it demands actions today to minimize future risks. But we know that normally in organizations, and not only financial organizations, the horizons of the decision-making is very short-term, and climate change is long-term. And last one, normally credit models look the historical data, but for climate change, we should look future data. We should look scenarios, climate scenarios. So that's why we have seen so many financial institutions looking climate change. There is a group that I would mention that is the TCFD, the Task Force on Climate-Related Financial Disclosure. You already should heard about Financial Stability Board. So they created this recommendation saying that climate risk has financial impact, has economic impact. So financial institutions and non-financial institutions should start reporting what are the climate risks. On the other hand, we see the network, the NGFS, the network of central banks and supervisors for greening the financial system. So it's a network only with financial regulators that are studying how to integrate this in the prudential regulation. And it's good to see that as members, we have many members from Latin America, and happy to see Trinidad Tobago in this list. So what that means, that regulators, financial regulators, will start looking more and more climate risks. So, and this is one of our expertise as UNEP. We want to help financial institutions understand how they integrate this in their own models. Said that, I was talk about the principles for responsible banking. So what's our role? So right now we have more than 240 signatories. That means 40% of the global banking sector in assets under management. And in Latin America and Caribbean, we have 70% of under management as signatories of the principles for responsible banking. So I won't cover everything, but here are the 6 principles for the responsible banking. Is very short, very concise, but it's very impactful, because what we want is that financial institutions look their country needs, they look their business and they align their business with the society needs. And by this way, make an analysis of positive and negative impact, engage with their clients, engage stakeholders, government, and have a governance in place to really integrate this principle as a strategy, not only as a compliance process. And the last one is the transparency and accountability. We want to know what banks are doing to implement the principles for responsible banking. So it's really it's new one. We have this since 2019. And it's a framework to help banks in their journey to integrate these issues into their strategy. In a very concise way, what we expect that banks analyze their impacts in planet and people, they set and implement targets, and of course, they be accountable of what they are committing and measure progress. So I think we have the opportunity to show what's the role of the financial system and the positive impact they have in society as financial intermediators. So we support banks in this journey as with peer-to-peer exchange, with working groups, collective initiatives, working with cutting-edge themes like climate change that I already mentioned, but others like biodiversity, gender, financial inclusion. All banks have individual feedback and tools to help them in this process. And the benefits of being a signatory is to stay at the cutting edge of sustainable finance. So it's one framework to respond across the bank in a strategical level, but also in portfolio and transactional level. And you look what are the new opportunities. We're having a project here in the Caribbean, specifically in Barbados, for example, it's one of them, and very focused on blue economy, sustainable blue economy. We know that it's huge, for example, in Barbados, the opportunities, and we know that we need international funding, we need multilateral funding. So what's the role of government? What's the role of these multilaterals? What's the role of banks on sizing these opportunities for blue economy? And of course, mitigating risk. We don't want to finance blue economy, tourism, fishery, or aquaculture, or other projects that are not compliant with social environmental best practices. So we expect working with banks to provide this knowledge and you can access to global community to talk about sustainable finance. So again, I think this is, I have two purposes today. One is to highlight the importance of sustainable finance, the importance of ESG for your agenda. Let me close here, you can see. The importance of sustainable finance, the importance of ESG in your risk agenda, in your opportunities agenda, and again, offering myself and offering UNEP to be part of your journey. And very happy to have Cab on board, because I think we can join efforts in this journey that we see more and more international funders, regulators, and other stakeholders looking this agenda so closely. So over to you, Wendy, and happy to have answered some questions in the end.
All right, fantastic. Thank you so much for the insights that you've shared, Maria. Before we go to questions, though, and maybe we are going directly into questions, I would like to invite Ray to join us. Ray, why don't you tell us a little bit about the catalyst, the decision that would have propelled Republic to take the determination or to take the first steps, and certainly as one of the first persons within the region to begin the relationship with them.
Thank you, Wendy, and it's a pleasure to share the stage again with Maria. We've gotten close, I think, primarily through our experience being part of PRB. So your question is around the catalyst. I think for us, it's very simple. The catalyst really is a result of our corporate strategy, which is a point that I think I heard Maria mentioned. You see, we view ourselves as as having a kind of a social license or a commitment, a social commitment that we have to our stakeholders. And that really centers around us being responsible corporate citizens in each and every territory in which we operate. So as we looked around for possible frameworks, ultimately that will allow us to execute on that strategy, we came across really the banking, really the gold standard for sustainability in terms of banking, and how do you incorporate that into your operations. So the UNEP-FI's initiative, we thought when we analyzed it versus some of the other standards, was the best that allowed us to instill or embed sustainability into our operations. So it wasn't just standing off on its own as a separate pillar, similar to how many institutions would have done kind of CSR over the years. This was an initiative that ultimately forced the business side of the bank to really think about sustainability in their products, in terms of our products and services. It's one of the key things that we actually had to do. So for us, it required, us looking at products and services, our delivery of products and services, how we think about those particular products to our customers, and whether or not they had the relevant or requisite sustainability measures embedded in them. And that stretched everywhere from your typical delivery of banking and checking accounts to our clients, whether or not we made that available to everyone, no matter your economic status. We think there's a right, we have a right to free speech. We think there should be a financial right for everyone to be able to, if they want to bank in the formal system, have access to it. So it's about how we then made sure that a lot of our products and services fit that bill around sustainability. But I think that's the process. None of this possibly would have been started. And I don't want to shower too much praise on him, because he's an individual that doesn't really like a lot of that. But you did have the benefit of having Nigel on your as part of day one. I could tell you that he has really been one of the key driving forces. It's very easy for me to get things done if I just say, well, Nigel said we need to do this. So I think, I think a very important part of that catalyst was to have the executive buy-in, and not just him. I think the entire leadership team, everybody saw this as something that ultimately will enable our bank to continue to operate, not only in jurisdictions that we operate currently, but potentially to expand. We've been around for about 187 years. And I think as the old saying goes, as we look towards the next century, what do we need to put in place to allow us to get there? And I do think that sustainability is going to be a big part of that journey.
Absolutely. It's really good to hear the role of leadership in taking this initiative forward as a thought leader in recognizing the need to impact the environment that we operate in. Ray, tell us a little bit about what your experience has been like to date, and what do you see as possible gaps that others coming in, and I do believe we will have others coming in, are likely to experience?
Yeah, I mean, our experience to date has been wonderful, in the sense that I think there was a lot of nervousness around signing on to a commitment that obviously has a reporting and a disclosure element attached to it. But I could tell you, and that's kind of where I I started my discussion around how close Maria and the entire UNEP FI team, we've become close, is that it's almost like I went to college, and I remember we would have almost professor aides kind of sending out, well, these are things you guys need to do before class comes up, right? So it kind of feels like that's where we don't feel like we're off on our own, just kind of doing this thing by ourselves. There's so much support that we get on a weekly basis, kind of, well, guys, these are things that other banks are doing across really across the globe, because it is really a global commitment, that has allowed us to quickly come up to speed. And so much so that I think that we are actually probably going to be one of the few banks that really start reporting well ahead of the the required commitment, just based on where we've how quickly we've progressed through our really our involvement to date. So my experience so far has been quite delightful. Where we found gaps, obviously, is a couple areas, primarily around how data collection, obviously, because much of this requires you to baseline where you currently are in terms of impacts. So therefore, it requires you to collect information where historically you would have collected it before. So then how do you, obviously, how do you dissect the information that you have in order to make sure you understand where your baseline is? So I think that's one of the key gaps. But the good thing is that the portfolio analysis tool, which really is a very useful guide to help you baseline, you could kind of massage the numbers in a couple different ways, meaning that even if you don't have granular information, you could really still assess what your actual portfolio looks like from a positive impact and from a negative impact perspective. So I mean, my experience, Wendy, has been wonderful, and I do agree with you. I would love to have some peers come along with us on this journey.
Well, I'm happy to say that the CAB has started. Like we said, we lead from the front. So we have jumped on board, and hopefully we will be able to assist in influencing, particularly from a knowledge sharing and education perspective for our members, so that we get the word out there and get people truly, truly sensitized to their need to get on board. This is an important conversation and one that we all need to be a part of. I would like to open the line to questions. So please, I believe we have a couple of questions queued. If we can have those popping up. Then Maria, I think that these are in large measure for you. Let's just see what comes up first.
Thank you, Wendy. While we wait the questions, maybe I would like to comment something important, because banking association has an important role in this agenda. And again, very happy to have you on board. And I think that because I work with banking association in Brazil, in Mexico, Colombia, Ecuador, many other countries, and it's an opportunity to have this joint learning as a region.
Yes.
So I see that happens a lot in other countries. So even if you don't have all the answers, at least you have a safe space that you can learn with each other and how you can improve the agenda. Because only one bank has this on board, and his agenda is good, but it's good when we shift the market.
Yes.
And working with the market could be very challenging, but at the same time, very good. So just to mention that.
Okay, thank you so much for that, Maria. And absolutely, we do have to hold hands on this one to get to the finish line. So I know that the first question came up hot and ready for you. What can we as members of the industry start doing today to provide support to UNEP and its very important initiatives?
Yes. So first of all, I think in financial institutions should start looking inside. Yes. So I really like what Ray mentioned, the role of the high level of the organization, but also the middle level. I think before signing a new commitment, you should have a clear conversation, an open conversation. So what's the role of sustainability issues in the corporate strategy? So what are the business opportunities and what are the risks that if not making this agenda happening? So I think talking internally, I would say that's the best first step. And then looking governance, and then looking the culture of the organization, because we have, like today here, Ray won't make, or even the CEO, he's part of the process, but what we need is the whole Republic Bank looking this kind of issue and integrating this. So it's very important to look this internally as a team, as a strategy. To join UNEP, we have some process, but we need the CEO signing the principle, and then we have a step by a step to get on board all the financial institutions, and then they can start working internally. And a multidisciplinary team is very, very important. It's not sustainability team or only risk team. It's both of them, human resource, marketing, legal department. So this is really a multilateral and a multidisciplinary team working on that. So we provide this kind of support and happy to contribute with you in the region.
Okay, fantastic. So for all of those of us listening in, it sounds like we need to revisit our strat plans to see where does this get incorporated and who are going to be the key players in ensuring that it happens. Yeah. Ray, let's go back to you for a quick second. What do you anticipate being the benefits for your organization, and how would you sell the idea of signing on to the principles for responsible banking to your fellow Caribbean banks and bankers?
Sure. I mean, let's start with the business of banking, and I believe Maria kind of touched on it a little bit before. We sit here in the Caribbean, which I think disproportionately, as we look at our assets, are exposed to a lot of climate risk, right? Every year we have the potential threat of a hurricane coming and effectively wiping out a significant portion of our region, where we are, in many cases, the lenders on a lot of those assets. So I think if we could start with the basis that we need to kind of think about banking from a climate perspective, I don't think that's controversial, right? I think that's probably something that everybody can observe, and we all price that risk. So, rather than us effectively just kind of being at the mercy, I think, of climate, I think what really what the UN and what a lot of these initiatives, including COP26, are saying is that we need to actually have action on it. And I think this is one of the initiatives that allows us to actually have action. The second aspect is, in banking, we have to be relevant, right? We can't, I mean, the emergence of fintech, they've effectively disrupted the entire banking industry. And one of the ways that we have to remain particularly relevant in this market would be to make sure that we're providing products and services that are really suited to our consumers. Our consumers are moving away from, consumption-based kind of economies and more of a circular economy. So everything that is produced has to be recycled, and there needs to be a path that really illustrates that. So if we're going to remain relevant, then we have to make sure that we're building products that are really geared towards our ultimately our consumer. And then the other aspect is we're starting to see a lot of governments, through taxes and through regulation, really impose higher costs on the old guard, on the old way of doing business. So ultimately, what that's going to lead to is a lot of the old financial models, as what would have worked previously before in terms of any business, is ultimately going to get impacted by how responsible they are. So it would actually be within our own interests to make sure that we're banking businesses that potentially, as we think about that cost curve, is not really going to be impacted by that. There's obviously a reputational aspect as well. I think as we think about the social side of things, the whole aspect around sustainability is not just about the E, right? It's not just about the environment. It's also about, do we have the right gender practices and policies in place? Are we thinking about diversity of thought in the boardroom? A lot of our stakeholders are very diverse, so it would behoove us to then really put forward decision makers or directors that only represent a sliver of that diversity. So we have to think about that from all the way from our governance level all the way down. And then lastly, I think, we're going to get regulated at some point in this industry. It's going to happen. Mark these words here, 2021, it's coming. And don't be surprised if out of COP26, there's some regulation that comes down the pipeline. When you start to see standards and boards like Basel and like SASB and like all of these accounting standards starting to work together and sit on committees together, ultimately what's going to result from that is going to be legislation that then gets rolled down. And one of the ways that we have to think about it here, which is a topic that in my first CAB conference did come up, is ultimately our corresponding banks are going to push that down to us. We're ultimately going to have to enact it because they tell us, in order for us to continue to do business with you, you're going to either have to disclose X, Y, and Z, or you're going to have to effectively do this. So that's my selling point to my fellow bankers here, in a typical banking sense.
All right, fantastic. And yes, I think you make some very good points that we need to jump ahead of the game a little bit of what is ultimately going to become perhaps policy and regulation for us. Thank you for sharing that. I think another question has come in, and I believe that this may very well be our last question for this panel, as we are moving very quickly towards the end of our two-day conference. Like, who could believe the time has gone by so quickly, right? Maria, I believe this one is for you. Can you speak a bit to the forecast for the region related to climatic events, and what should we be preparing for? A glimpse into the future.
Thank you, Wendy. So just making a connection of what Ray just said about we will have regulation. Right now, we are making some trainings about climate risk for financial regulators in the Caribbean, Jamaica, Barbados, and other countries. So we have seen more regulators wanted to know more and create internal capacities for this. So this is the first remark. About how should we prepare for. First of all, I think every country has an NDC. It's a comprehensive report of what are the climate impacts in your country. So first of all, I think it's a good starting point, because normally they have a lot of data. What are the vulnerable areas? What are the sectors that will be more impacted? The carbon emissions, what are the sectors that they are more carbon intensive? So this is the one first report that you should look in your country. For the banking perspective, banks around the world are working with climate stress tests. So trying to identify with different climate scenarios, what are the potential losses? So if we have 2 degrees, 3 degrees, if we have more droughts or more natural disasters, what will happen to your portfolio? So I think this is one first way to look the climate events and being very straightforward on connecting with your rating and connecting with the potential losses. So this, I think, the best way to start. And by this way, you will have data, you will have information to show this is not an environmental agenda. This is a business agenda, because what I have seen in other countries and with other banks, that some sectors will lose money, some sectors will shift, but on the other hand, we will have opportunity. Energy is an example, tourism, sustainable tourism is another, fishery. So I think that's getting on data, I think it's a good recommendation to understand in your portfolio, what are the sectors that would be more impacted by climate change, which regions would be more impacted. And by this way, you will have information to dialogue with your credit team, risk team, and business team. Because in the end, what we need is a climate strategy for both sides. And I also recommend you to look the TCFD recommendations because they provide also a good framework how financial institutions can understand and mitigate climate risks.
Yeah, absolutely, Maria. I hear you. And I think as we have more members who will come on board, it certainly will assist with the data gathering information because we would form part of the group, so to speak. And so information flow and sharing would be a lot easier. I want to say a special thank you, Maria and Ray. There are no more questions coming in from the audience, but certainly a rich exchange of information as we have come to expect when we have the two of you in the same space, not the same room, but the same space. So thank you again for spending time with us this afternoon.
Thank you so much.
Thank you, Wendy.
Pleasure, always. All right, so thank you again.